Hi, everyone. Thanks. I'm Lon Shaver, president of Silvercorp Metals. I'd like to thank you for joining us this afternoon to hear the Silvercorp story. First off, I'd like to draw your attention to this slide containing the usual cautionary statements that this presentation does contain forward-looking statements. So to kick off, in terms of the Silvercorp story, really it's quite simple. It's one of leveraging the experience and the financial strength of operating profitable silver mines in China to support growth into Ecuador. And I suppose I should add, hopefully beyond, as we certainly have aspirations for further growth. Looking at where we come from, we have a proven track record, and we've been in production since 2006. Our mines have delivered over 100 million ounces of silver and 1.5 billion pounds of lead and zinc. Our mines have generated profits in excess of 600 million, which has allowed us to return capital to shareholders of 200 million through dividends and buybacks. And we do pay a dividend. It's also allowed us to build a strong balance sheet where we're sitting with 377 million in cash. And on top of that, we also have investments in other mining companies currently worth 135 million. So looking at the mines, the two red dots in the map of China, those are the Ying and the GC operating mines that we've been running. And that's what's allowing us to move forward and build the El Domo copper gold mine, which is currently under construction in Ecuador. Back in China, as part of the Ying mining district, we're looking to bring on another mine called Kuanping, which will be a satellite operation. And I'll talk a bit more about this on another slide. And also in Ecuador, we're advancing the Condor Gold Project, which is currently under a PEA study. And last but not least, we have a former producer in China called the BYP mine, which is a gold operation, and we're looking to get that re-permitted to reopen that. Actually, I should also note, you'll see on the map, we also have exposure to Bolivia, and I'll talk about that in a second as well. So when we look at the bottom here, with a consensus NAV of 1.6 billion and a market cap of now 1.2 billion, we're trading at a discount. Our view is the best way to tackle that is through growth, and that's both organic assets, so the ones we currently have, and as I'll go through in a second, we're looking to increase our production at the Ying mining district and bring on that Kuanping satellite target. Mine under construction, El Domo in Ecuador, another gold project, which we think we can develop as a high-grade underground gold mine in Ecuador. Acquisitions have been a key part of our focus, going back really to 2020. For the targets that got away from us or the competing bidders and where we didn't chase and overpay, we still succeeded in making $30 million through break fees and toe holds. But we did close the Adventus acquisition in July of last year. And the focus for us in acquisitions is looking at high-margin projects, ready to be built and at reasonable CapEx. And a key point here, ready to be built means with permits. We're looking at projects with permits or strong visibility on getting those permits, not buying long-term projects that sit on the shelf as you wait for permits and deal with these kinds of issues. Our third element of growth is incubating other ideas and other opportunities that can add value. And the real focus of this is the 28% stake in New Pacific Metals, which is the largest of those investments that I mentioned. New Pacific is advancing two very attractive open-pit silver projects in Bolivia. And I have a slide later in the presentation, and I'll talk a bit more about that. So when we look at where we were and where we've gotten to through this Adventus acquisition, on the left-hand side, you can see the inventory of gold and silver represented in silver equivalent of our mines in China based on the last 43-101 technical reports that we published. So we were sitting with a proven and probable reserve of 108 million ounces. On top of that, in the measured and indicated category, not included in that reserve, was another 120 million ounces. And beyond that, we had identified another 103 million ounces of inferred. Following the acquisition of Adventus, you can see the proven and probable bump to 162 million, the M&I to 181 million, and the inferred to 269 million silver equivalent ounces. And it's important to note that this equivalency calculation doesn't include the copper, lead, and zinc that are at a number of these projects, and obviously contribute to the economics of them. Another way of looking at the growth that the acquisition of Adventus has brought us is looking forward through to revenue. The left-hand side brings forward our revenue profile based off of those technical reports. And so you can see in 2 years out, we would be generating about $400 million in revenue, with the majority of it coming from silver. A full year's worth of production at El Domo, and this is after the Wheaton stream, would add about $211 million, so over 50% to our revenue, and brings a contribution in copper, a metal we don't really have any significant exposure to, of about $113 million. And notwithstanding the Wheaton stream, you can see that gold bar that with current gold prices, El Domo would still be a significant producer or a contributor to our gold revenues when it's in production. So let's jump in and look a bit more at the actual assets. So I mentioned the Ying mining district. It's in Henan province, China, and it's 7 mines contained within the 4 mining permits, the red boxes that you can see at the bottom of the map. And it feeds ores to 2 mills contained in that little red box just above. We produce silver, lead, and zinc concentrates, which are sold to smelters within the province at very favorable terms. And the mine's 15-year mine life has benefited from extensive exploration drilling since the beginning. We've drilled over 2.6 million meters since we began production, and this year we have a very healthy 250,000 meters planned in this fiscal year. We've embarked on a program at Ying of optimization to grow production, and that's really entailing a transition to more mechanized mining. To do that, we're planning to invest $25 million out of cash flow this current fiscal year to enhance ramp access, getting down to the ore zones. This is to allow us to bring down bigger trucks, equipment, and people. And it'll also help us transition from a mixed production model, including some shafts, to where we're 100% trackless using rubber-tired LHDs. I mentioned the Kuanping target. That is a project 33 kilometers to the north. We picked that up in an auction in 2021 and have gone through the permitting process where we've broken ground, and we're looking this year to spend $4 million to drive a ramp down and some exploration tunnels. And I'm highly optimistic that while it's not in any of our guidance, we'll have some exploration or development ore that we'll truck to the Ying milling facility. Switching to El Domo in Ecuador, this was the key reason for that purchase of Adventus. The 2025 CapEx estimate that we've published of $241 million is based on contracts we sign and visibility into the remaining elements. This would be funded by that cash balance on hand, as well as a $175 million contribution from Wheaton in relation to the stream agreement. We haven't really made much change to the feasibility study highlights that you can see on the right-hand side of the slide. And earlier this year, we began construction, really mainly focused on early site prep and earthworks, opening up and widening roads, preparing platforms for fuel storage for the plant area, putting water drainage and diversion tunnels, and installing a camp, because this fall we're looking to really ramp up and start the meaningful earthworks and stripping of the open pit, as well as preparing for the installation of the process plant. We're currently planning for the construction to be complete at the end of calendar 2026. Now, I mentioned the Condor Gold Project, which we hope will be our second mine in Ecuador. It's in a different part of the country. It's in the south. It's 55 kilometers south of the Mirador copper gold mine, and it's 33 kilometers south of Lundin Gold's Fruta del Norte. Here we're benefiting from over 150,000 meters of drilling and $83 million spent by prior operators since 1993. And what we did this year was we went back and looked at the data and looked at it a bit of a different way and published a resource on 2 deposits, the Camp and Las Cuyas, where we're looking at that not as an open pit, but as an underground. And the initial numbers are good. You can see 340,000 ounces at 3.3 grams in the indicated category, 1.4 million ounces at 3.5 grams in the inferred. What's currently in progress is a PEA study, which we hope to have done by the end of the year, maybe early in the first quarter, and work on getting permits to drive exploration declines, twin exploration declines down to these two deposits. With that, we can perform some more detailed exploration and firm up those resource numbers, which we can then plug into that PEA and make a decision going forward. But we're thinking this can be a high-grade underground gold project, a different plan than the previous operator. This slide highlights our history of growth in silver equivalent production. Again, just looking at silver and gold converted to silver equivalent. You can see the last few years we've seen an uptick in that production rate, and we're currently forecasting 8.3 million ounces silver equivalent in this fiscal year. And given our cost profile, which was an all-in sustaining cost of just over $12 an ounce net of byproducts for the fiscal year that ended in March, we've got very healthy margins. Those margins, as well as the production uptick and obviously the increase in the price of silver, is what you can see here in the last 5 quarters, where we're showing stronger adjusted net income on a quarterly basis, and we're continuing to deliver strong free cash flow. I'll note that our free cash flow does experience some seasonality in China, because there's always a bit of a slowdown in Chinese New Year, which is our fiscal 4th quarter. And going forward, as we ramp up expenditures in Ecuador, this will get a bit noisier as well. So with all this on the plate, we're sitting in a situation where, on a trailing basis, looking at these 3 metrics of valuation, EV to EBITDA, price to adjusted earnings, and price to cash flow, we do trade at the lower end of the spectrum. I will note that we're one of the few remaining silver companies that's a largely single asset, single jurisdiction company. And as we move forward and diversify and build out a more broader platform, we think we can achieve a re-rate to higher multiples, which can deliver some significant upside to our shareholders. I'll take a slide just to touch quickly on New Pacific. So we own a 28% stake in New Pacific, which trades on the TSX and the NYSE as well. And we helped to fund the acquisition and discovery of 2 large silver projects in Bolivia, Silver Sand and Carangas. And for us, indirectly, at present, it gives us exposure to another 145 million ounces of silver equivalent, just looking at the silver and gold contained in the M&I categories of the 2 projects. Silver Sand's been the flagship. That was the first project. And the PFS that was published last year identified a project with an average of 12 million ounces of silver a year for 13 years, with between 15 and 16 million ounces in the first 4 years based on grade profile. A very manageable CapEx at $358, and you can see 740 million NPV at a $24 silver price, which was what was used in the study. Carangas is the second project, came a bit later. Not quite the same production rate, 6.6 million ounces, but over 16 years, as well as lead and zinc byproduct credits, which gets you down to below $8 on an all-in sustaining basis. Again, very manageable initial CapEx of $324 million and a 500 million NPV, again at that $24 silver price. These 2 projects are now focused on advancing the community relationships and agreements to allow for completion of permitting and being in any position to make a construction decision. A quick slide just from a capital markets and ownership standpoint. You can see on the left our top 10 investors, a mix of some familiar names in both the ETF, quant, as well as long-only space. On the right-hand side, the pie chart shows we're roughly split in terms of ownership, 50% retail and high net worth investors, and 45% institutions and insiders at 4%. Currently covered by 4 houses, Canaccord, BMO, Raymond James, and Roth, and optimistic that we could add to that list in the near future. Upcoming catalysts, obviously, is advancing the construction of the Domo project and bringing it into production. Also advancing Condor and continuing to validate our thesis that this could be a high-grade underground gold mine, and the 4th mine to be developed in Ecuador. Another catalyst is continue to deliver on increased silver production out of our Ying mining district. getting a permit to move forward with the gold project, the BYP gold project in China. And as I've indicated, New Pacific has some significant catalysts going forward as it relates to permitting. So I think I'll wrap up here and see if there's any questions. What we're looking at here is our mill number 2 at the Ying Mining District, and it's actually showing the expansion that we completed, where we bumped the capacity from 2,500 tons per day to 4,000 tons per day at a cost of $7 million US. Those are the new darker blue buildings you can see in the middle forefront of this picture.
Does anyone on the floor have any questions? He's bringing a microphone.
When and what cost did you get into Bolivia?
Well, New Pacific had the opportunity to acquire the Silver Sand project, and that was in 2017. And so from a Silvercorp standpoint, we helped fund that acquisition cost through a placement along with some other outside investors in 2017.
Lon, I've got a few questions myself. Clearly M&A has been a significant part of the strategy, and you mentioned, the China production is funding growth into Ecuador, Bolivia, potentially beyond. When you say beyond, what jurisdictions are you open to moving to?
Well, we're generally open-minded. We're looking for areas where, again, we can move ahead with demonstrable milestones. And so when we look at it, we think of Latin America, Mexico South. We're obviously open to Africa. We were looking to buy a big gold project in Tanzania. And I'd say broader Australasia would be, the key areas of focus for us. And we're prepared maybe to look at some jurisdictions not looked at by others, because we think there might be opportunities to surface value, getting on the ground and seeing whether you can actually build something. And if it's not a development project, we're open to looking at existing production as well.
Any more questions from the floor? Another one for me on jurisdiction, Lon, if I may. So obviously a key focus for investors. How do you frame your China exposure as part of the value proposition, and would you continue to grow there, noting you do have one exploration project recently picked up?
Well, I think from a China perspective, we've been operating there and have really only made one investment to get a business started back in 2004, which was less than $10 million. Since then, no other money has gone from head office to China. It's all been the other way around. And we view our exposure to China similar to other Western companies that have gone to China to build companies to get business done. We just happen to be in the mining business, whereas other entities are there for manufacturing or other interests. And so, going forward, we see very little risk to operating in China, and obviously it's been very profitable and very productive for us. I think that's really sort of the first part of the question, but then you were talking about exploration?
Yeah, I guess maybe a broader question. You do have that exploration opportunity in China, and there are development projects ahead of you, but is there anything you'd like to highlight from an exploration standpoint across the portfolio, potential opportunities that you haven't spoken about yet?
Well, I think it's interesting. If you look at Ying, it's been in production since 2004, and we're still sitting with a 15-year mine life based off of reserves. So it's been very productive. We have a track record of replacing our depleted reserves. So I think Ying has a very long runway in front of it for further exploration. In recent years, we've identified some different mineralization in addition to the traditional silver, lead, zinc that we've been mining, which is higher, richer in gold and potentially in copper. So as we go forward, we think there's further opportunities for discoveries on that Ying package. And as we identified, within the district, there's other deposits such as Kuanping that could become available. And we clearly are a preferred operator in the district, and I think we'd have a good shot at getting those and folding those into our business to grow that. So those would be I'd say, the strongest and key areas of exploration growth in China. The BYP mine was a mine we were operating. It was a silver-lead, mainly a lead-zinc mine that we put on care and maintenance in 2014. But it has a 43-101 resource of about 500,000 ounces at 3.5 grams, which would be economic given the infrastructure and the location in China. And if we're able to get the permit for this to reopen it as a gold mine, it's something that we'll either monetize as a windfall that nobody gives us any credit for, or potentially IPO it or list it in some way to surface some additional value.
That's great. Lon, thank you very much for spending your time with us today.
That's great. Thank you.